All right. Welcome to Weekly Roundup, Hart Investment Group. Scott Goodfellow, the namesake, Ben Hart over there waving along with
Hello.
the Canadian flag, being extra patriotic today. Oh, it's waving nicely now, too. The Canadian flag right next to your hand.
That's amazing.
It's flapping nicely.
Amazing.
Yeah, you were just mentioning offline there. That's been a busy week, even though it hasn't really been that busy, a lot going on. Um, one of the things I wanted to bring your attention, you probably have it on your list too, is I noticed that Chair Powell calls inflation too high still and warns that we're prepared to raise rates again.
Just amazing, Chair Powell.
Did you see that headline today or no?
Oh yeah.
Okay.
No, Jackson Hole. It seems lots of attention waiting for him to speak. Really around where he thinks things are. That this tends to be like late August Jackson Hole meetings. They try to slip in some information as much as they can about what they think happening in the world. But yeah, he came. There was, I guess, a little bit of thought leading up to it that he may change the target to 3% inflation. And, I think that's probably pretty unlikely that any of the central banks do that. Uh, I think it's probably more likely they just change the way they calculate inflation to get it under 2%.
Right.
So I think maybe some people are waiting for that. Yeah, he said inflation's still too high. I think probably he's, as you read it, he's channeling Volcker, like he's trying to be this strong arm. And, I think what is going to happen is that the recession will be already too deep by the time he comes to the conclusion that he needs to change directions. And from listening to Steph Pomboy this week, who I've talked about before, a really good economist who thinks about the world, said, first course of action is probably QE or yield curve control, where the bank, U.S. central bank, becomes the biggest buyer of treasuries again, artificially slamming down the interest rates and yield curve before they move on that kind of front end overnight rate, which everyone worries about.
Gotcha.
Long-winded answer to your question, but yes, saw it.
Well, I was a bit distracted here because I saw that headline definitely caught my attention that Twinkies maker Hostess Brands explores sales amid takeover interest. I was interested in the Twinkie sale, as you can imagine. Enter your own joke there.
Yeah, exactly.
Oh, we're just full of
Um,
it today, Ben. Okay,
a,
what else is grabbing
s-
your attention this week?
a staple in my diet as a 13-year-old Twinkies.
Yeah.
Well, certainly multiple things, but President Trump indicted plus his 18 other friends, Giuliani and some of the other people that you've probably heard about. Um, Trump, that was yesterday, I guess, he decided to turn himself in Atlanta. Mugshot, used his mugshot as a marketing piece to generate more revenue, income for his campaign. But more than anything this week, noted for Trump, if you saw or do follow Tucker Carlson, Tucker used to be kind of the lead anchor, we'll say, on Fox News. Then Fox fired him. He started his own show, kind of streaming, free service type thing. When the GOP debates were on Wednesday night, which is the Republican debates, that Tucker Carlson and Trump went live 5 minutes before the debates started. So the amount of attention that attracted versus the debates was insane. I think we had something like 300 million views of that video within a 24-hour time frame. And the amount of attention it took away from the Republican debates was massive. So long story short, I think he continues to have lots of attention. One of the questions they asked during the debate, though, was, if President Trump is chosen as your Republican candidate, will you support him as your leader, even if he's indicted? And so obviously you saw an interesting show of hands where 4 of the 8 put their hands up immediately. The other 4 reluctantly put up their hands. But if you want to think about people continue to think that it's not likely he's going to get the leadership race. I think it continues to be very highly likely that he becomes the next leader of the Republican Party again.
Yeah, the thing that I noticed most out of that group of mugshots of him and all his buddies were I've never seen a group of people that had just been arrested that seemed like they could care less that they got arrested. Like they were not concerned about it whatsoever. Right? Like most people have that kind of look of fear and concern, like, oh my God, I got arrested.
Yeah.
They're like, we're somebody's gonna take care of this. Right?
Yeah.
Yeah.
Yeah,
So
exactly. Yeah.
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 Okay. Did you pull some slides for us this week or
Yeah. Got a few. Got a
okay.
few.
All
Yeah.
right. Did you want to get to that or you have something else?
Let's no, let's I think we had a question pop in
Oh, we
there.
did
Maybe
already. Sorry about that.
we can hit that and then
Let me.
I'll jump into the slides here.
All right. It's from Lyle.
Okay.
Powell, two means two unless unemployment reaches 6% and GDP is -1.
Yeah. Yeah, look, I think that the what's likely to play out from here is that 2% number is likely to stay where it is, but you know, just like we had last year, where the government kind of changed to what they deem a recession. U.S. government, obviously, we had 2 negative quarters of GDP last year. They found a way to change the narrative to effectively say we didn't have a recession. So I think similar something plays out that way, where they change the number to decide how to get under 2% when they need to. And unemployment and what was the other question about? Oh, minus one. Yeah,
Yeah.
so I think GDP will take care of itself. If rates stay at these levels, GDP continues to contract aggressively, and so you get contracting GDP, and you get a new way to calculate that inflation. Which I've talked about and we've talked about for weeks, is that we got supply side inflation, and they're dealing with monetary policy to try to control supply side inflation, which they're like apples to oranges. They're not the same things, so they were using the wrong tools. So we could see government interventions to deal with the inflation issues, where they cap prices, something like that, some kind of cap system, which can help them get under the two. But yeah, I think they're sticking with that 2% number. We'll come up with other ways to take action when they need to.
Gotcha.
Yep.
All right. Let's slide into the slides.
Mm-hmm.
Also known as Ben's charts.
Fair. All right, you good? You see it?
Yeah, while you're doing that, I'm gonna really dig into this Twinkie sale here. So have at it.
Sounds great. So just obviously try to touch on a bunch of things, but certainly sentiment plays a major part for what happens into the markets these days, and this is really economic sentiment. So this is Merrill Lynch puts this out, or sorry, Bank of America Merrill Lynch. It's a global fund manager survey, and so it's interesting to see how sentiment changes and evolves over a period of time. Certainly, the market has an impact. The economic data has an impact around how fund managers feel about this. But we look on this top slide, so this is soft landing. Effectively, 65% of fund managers in August believe that we're going to have a soft landing based on what's happening right now. In July, that number was higher. Obviously, the markets were doing quite well, so that's probably why that number was higher, closer to 70%. June, similar to 65. So, consensus view is that we have a soft landing, which is effectively what the market's thinking right now. And then as we start to move out on the landscape, you look at, which I find kind of more interesting, is just the hard landing scenario, which is we had June kind of hard landing scenario was kind of 27, 28%, July slightly less, and then again August slightly less as well, which I find interesting as we see things evolve here. And so this, non-consensus view is we have a recession, kind of a hard landing recession. And the no landing, also interesting. No landing effectively means will not have a recession. The economy will continue to expand, similar to the Atlanta Fed view, which is the Atlanta Fed puts out this forecast. They effectively right now have a 5.8% GDP forecast for this year, which is nowhere near anyone else's predictive view. So anyways, the no landing view is that the economy will not contract and will continue to go from here. So this is a sentiment check on what's happening in the world, particularly the US. So this is a report that came out from Capital Economics. I think this is today's report or yesterday's report, just kind of around their view for where they think treasuries are. Certainly we could look at these if you want, but I thought more pressing and more interesting was kind of their view for where they see the US 10-year right now, the US 10-year yield. And so just to give you context, today, the US 10-year bond yield finished at 4.23%. And so their view is, if we look at this here, forecast for 10-year treasury yield of 3.25% by end of year. So effectively, that's a full 1% different than where we are right now. What that means from a ownership perspective, if you were to buy 10-year treasuries right now at the 4.23%, and we get to year end and we're at 3.25%, your bond would have gone up about 10% plus your coupon. So you're making about 12.5% over the next few months as we head into year end. Their continued view for 2024 is that once we get to these levels, we probably end up quite similar, but again, similar looking like a kind of a 14 to 18% return by the end of 2024 for 10-year bonds from this point forward. Thought this was an interesting view because it is really kind of a non-consensus call today. So as we look around what's happening in the world and we think about Canada, which I think is important because that's where we live and work and think. Canada's done an excellent job of being, I'd say, responsible from a ESG perspective. And, I think as the country's economy contracts, which what we're going through right now, but we're also having the benefit of the massive immigration. We should be thinking about how these two things play out and how we can really be strong in the world as we go forward, where we're getting a lot of this reshoring where people want to build plants back in North America. Presently, right now, the US is getting most of that. And it's a bit of a shame because Canada's, our power grid is still one of the cleanest in the world. Our electricity is a lot cheaper than the United States, but some of our policies are detrimental for companies wanting to come to Canada. So I think it's important that we know what's happening, and this gives us Canada some great opportunities if we're willing to change some policies. But we're a super clean economy from a carbon footprint perspective. Just two more slides. And I do sometimes talk about technicals in the daily, so I thought I'd put this in here. National Bank does do technical research on pretty much every stock in the TSX and most in the S&P 500 as well. So I get daily updates that I'll look at. But this is an interesting view on Bank of Nova Scotia because there's a lot to be said about what's happening with the banks from a fundamental perspective, from an economic perspective. This is the technical view of it. And so for any of the technicians here, this is what we're seeing right now. Bank of Nova Scotia's chart looks quite weak. We have this pattern, which people would call a wedge pattern, where we're starting to see it come into this direction. And so if you look at what our technical target is right now, if we break down from the 63 support levels, probably heading towards the 55. And from a long-term perspective, that level tends to indicate a very good opportunity because that's slightly below the kind of long-term moving average for Bank of Nova Scotia. So maybe we have a reasonable setup to think about here. What are the fundamentals? What's happened? Bank of Nova Scotia is actually down about 40% from its highs a year and a half ago, and we're seeing this technical setup. So this would be something to be conscious of and pay attention to. As I brought this out last week, this is again the view that the Bank of Canada would be looking at. These are the kind of the top 5 metrics along the top here. Most importantly, probably these 3, which is unemployment, inflation, and GDP. Not much change. GDP continues to tick up a little bit here. We did see this number, which I think is interesting, which is consumer confidence. was down about 7% year over year. And then for those who watched this number, which was the July Purchaser Managers Index PMI, came in kind of 15 points below. So that is a material contraction. And for those who we've talked about, where I've discussed ISM or PMIs, anything below 50 tends to be a contracting economic period. And so the last piece is just on what's ahead. These are kind of the two reports for Canada. Obviously, this is the last day of last Friday in August. But as we get into Thursday, Friday next week, fair amount of data to come out from Canada's perspective. So we'll be watching to see how that plays out from here.
Okay, great.
Good, good.
Lovely. Good one. Okay. All right. So moving forward into the last week of August, besides back to school or Labor Day weekend and the back to school, what else are we forecasting for next week?
Yeah, so we saw obviously Powell spoke this morning, so I think it was interesting to see what happened coming out of there. And you look along the curve to see what happened to the bond market from his comments, and there's kind of short-term rates which people pay attention to, midterm, which would be like 3 to 7 years, and then 7 to 10, and then kind of 20 plus. And so what we saw out of his meeting was the long end of the bond curve, actually yields fell into that environment, and the short end moved up a little bit. And so I thought that was an interesting piece to think about, because that's really kind of the anchor for where people think the economy is actually moving. And so I'd be watching that, just seeing if it was a normal event, because long bonds rallied today, but the rest of the market was pretty flat. And if he wasn't indeed super hawkish like everyone thinks he was, that long end should have sold off as well, but it didn't. So I'll be watching that, see how it plays out.
Hawkish opposed to dovish.
Right. So meaning that he wants to continue to keep pressure on interest rates and make it continue difficult to get money for people.
Gotcha.
Yep.
Okay. Anything else you want to any words of wisdom before we let people get on with their weekend?
I think that's it. I know we do have a couple of events that we've been talking about to bring out. We've lined up a few speakers in the last quarter or so of this year. So as we get more details, we'll bring that out. I see the questions there. Is there another question we need to hit before we go?
Yep. Lyle's got another one about Audi. Audi has just rolled out the last of legendary R8 supercar. Oh, I didn't know that. Oh well, I no longer have to think about what I'm gonna do with my excess investment profits. Hilarious. I like that car.
Yeah, that's a great
the
car.
Legendary R8. Yeah,
it's a great car. Great car.
They'll re-release it in 10 years or something.
Yeah, exactly.
Who knows? Who knows?
Yeah.
Oh, interesting.
Yeah.
Good to know. Thanks for that. All right, Ben. Is that it?
That's it.
All right, let's pack it up, move it along,
Yep.
and we'll see everybody next week.
Sounds good. Thanks. Take care, everybody.